In the world of finance, anticipation is building as stock futures remain relatively stable, with traders eagerly awaiting a significant announcement regarding monetary policy from the Federal Reserve. This pivotal decision, set to be revealed on Wednesday, is expected to have far-reaching implications for the economy. As of late Tuesday, futures for the S&P 500 saw a slight increase of 0.02%, while the Nasdaq 100 futures mirrored this with a similar rise of 0.02%. Meanwhile, futures linked to the Dow Jones Industrial Average experienced a modest uptick of 13 points, translating to a 0.03% gain. The consensus among traders is overwhelmingly in favor of the Federal Reserve implementing a reduction in interest rates. This anticipated move is seen as a potential catalyst for stimulating the U.S. economy, especially in light of recent indicators suggesting a slowdown in the labor market, all while inflation remains stubbornly above the central bank's target of 2%. In addition to the rate cut, the Fed will provide crucial insights into its future rate outlook through the much-scrutinized dot plot grid, which accompanies their quarterly summary of economic projections. Investors are also keenly observing for any dissenting opinions from Fed officials, particularly following two notable disagreements during the last meeting in July. Current market expectations suggest a staggering 96% probability that the Fed will opt for a 25 basis point cut, with only a slim 4% chance of a more aggressive half-point reduction being announced on Wednesday. These figures are derived from interest rate futures trading data provided by the CME Group. Paul McCulley, a former managing director at PIMCO, shared his insights on CNBC's The Exchange, indicating that a conservative quarter-point cut is the most likely outcome from the Federal Open Market Committee's upcoming meeting. He expressed skepticism about the feasibility of a 50 basis point cut, stating, "Honestly, I can't see how I would justify such a move in the current context without implying that the labor market is a significant concern, which I doubt is the message Chair Powell wants to convey at this moment." As the trading day concluded on Tuesday, stock prices remained largely unchanged. The S&P 500 reached a new intraday high before retracting, while the Dow Jones Industrial Average fell by 125.55 points, closing 0.27% lower at 45,757.90. The tech-heavy Nasdaq Composite also failed to gain any new ground after achieving record levels the previous day. In after-hours trading, shares of Cytokinetics saw a rise of approximately 1%, following the company's announcement of plans to raise up to $550 million through an offering of convertible senior notes due in 2031. On another note, Subhadra Rajappa, head of U.S. rates at Societe Generale, warned on CNBC's Fast Money that if the Fed adopts a less dovish approach than the market currently anticipates, it could lead to a decline in stock prices. She stated, "You might witness an unwind if there's a perception that the Fed is not prepared to act as aggressively as the market expects." As we await the Fed's crucial policy announcement, stock futures remain steady, reflecting a cautious optimism among traders who are preparing for what could be a defining moment in the financial landscape.